sustainable development, which has brought significant impact for many nations globally. Nigeria is currently regarded as the potential hub for Islamic finance on the continent, and with the emergence of new regulations and markets to support the industry's growth. The resultant effect is seen in the growing number of players, including 2 Islamic banks, 4 Takaful insurance companies, several microfinance banks, and managed funds. In the post-pandemic world, Islamic finance will play a critical role in global economic recovery by catalyzing recovery and growth through anticipated capital raising activities by governments, development finance institutions, DFIs, and the private sector, with more issuances of SRI, ESG, and SDG-themed sukuk. In June 2020, the Indonesian government issued a $2.5 billion global Wakala sukuk in 3 tranches, including a $759 million green sukuk to support the government's coronavirus control initiatives. And also in June 2020, the Islamic Development Bank raised $1.5 billion with its first sukuk of sustainability, designed to help the recovery of COVID-19 in its member countries. Nigeria is one of its member countries, and with a capital subscription of $3.9 billion, which is just shy of 8% of the total capital, Nigeria is one of its 9 largest shareholders. In Nigeria, there are plans for expanding sukuk to other projects for revenue generation. The resultant effect of this expansion will be more investment opportunities for retail investors, and the Nigerian Exchange, working with the Debt Management Office of Nigeria, will be at the forefront of providing safe and secure platforms for you as an investor. The other notable investment opportunity we'll be discussing today is green bonds. Green bonds are it is a well-known fact that the Nigerian Exchange collaborated with the Ministry of Finance and other stakeholders to launch the first climate bond initiative certified sovereign bond. This is an important milestone as the country continues to show thought leadership with its green financing agenda, while giving exposure to a new investor base, whilst complying with the Paris Climate Change Agreement. In fiscal year 2017, the federal government of Nigeria issued its first sovereign green bond to the tune of $10.69 billion, which was used to finance 3 projects. Following the success of its first issuance, the second series of the sovereign green bonds, valued at $15 billion, was done in the second quarter of 2019. The bond was oversubscribed, and its proceeds are currently funding 23 eligible projects cutting across 5 NDC sectors. That should be 15 billion naira, not dollars, on the sovereign green bonds. In 2019, the exchange took its ambition global by signing an MOU with the Luxembourg Stock Exchange to promote cross-listing and trading of green bonds in Nigeria and Luxembourg. Finally, the potential for sukuk and green bonds remains immense and is likely to expand over the years, underpinned by new markets, products, and issuers, and healthy investor appetite. The exchange will continue to provide an efficient and liquid market for investors and businesses in Africa to save and to access ethical and SDG compliant capital investments. We promise to continue our collaboration with all market stakeholders to collectively contribute towards the enhancement of this exciting asset class, and ultimately towards the growth of green and sukuk bonds in Nigeria and Africa at large. I want to thank you all for listening, and I promise you an engaging session, and I thank you very much again for joining us. Thank you. Toby, over to you.
Thank you, Mr. Popola, CFA, for your wonderful remarks and for officially setting the ball rolling for today's webinar. Without further ado, I will now invite Mr. Abdul Kadir Abbas, who will be delivering the keynote speech on behalf of the Director General, Securities and Exchange Commission, Mr. Lamido Yuguda, CFA. Over to you, sir.
Thank you very much, the MC. And Very good afternoon to distinguished participants. On behalf of the DG, I'm presenting his keynote address, but please permit me to convey the DG's warm regard. Unfortunately, he has another pressing engagement. That is why he couldn't join this important webinar. So I'm presenting his keynote address, and I will also appeal that I will write on the existing protocol that has been established by the CEO of the exchange, Mr. Temi Fopula. Ladies and gentlemen, very good afternoon. This is the keynote address by the Director General of the SEC, Securities and Exchange Commission, Mr. Lamido Iguda. It is my honor and privilege to be invited as a keynote speaker at this important event, Retail Investor Webinar. I congratulate the conveners of this event, the NGS, on its consistency in holding educational program focused on building capacity and growing the depth and breadth of our market, especially in emerging sectors such as non-interest and socially responsible investment. A capital market that has depth and breadth is one that is characterized by adequate product offering for trading, portfolio diversification, and hedging risks. As the first regulator of the capital market, the SEC has a dual mandate of regulation and market development to ensure an efficient, fair, and transparent market where investors are protected. As such, market intermediaries and issuers are subjected to timely and accurate disclosure of relevant information. This forum, like many others, therefore affords us the opportunity to educate retail investors on the gain of investing in the Nigerian capital market through sukuk and green bonds. The non-interest capital market and socially responsible investment sector in Nigeria is nascent and unique. It is a market of full potential and can facilitate the deepening of financial system while spurring the growth of our economy. Sukuk, green bond, work stock, work-off fund, etc., offered in this type of financing and investment provide an alternative means for resource mobilization. Fair and equitable allocation of resources that could help address the financial exclusion and alleviate poverty through job creation, among others. Recently, in addition to the oversubscription of the 3 sovereign issuances of sukuk by the FGN, which was over 400%, the market witnessed a corporate sukuk issuance by family homes, which was fully subscribed. Registration of 3 Islamic funds, which include First Islamic Real Investment Trust, as well as entrance of other institutions offering Islamic capital market services. This further buttresses the need to enhance our investor awareness program and protection mechanism in order to sustain the development in the sector. As you are aware, one of the success stories of Islamic capital market in Nigeria since 2014 has been the issuance of sukuk. At the moment, Nigeria has raised over 362 billion through issuances of 3 rounds of Ijara sukuk to finance road infrastructure, as the CFO highlighted. The feedback from the investors has been very remarkable, with 105 subscription. That was the first issuance in 2017. 132% subscription in 2018 by the sovereign issuance, and then the last issuance recorded 470% subscription, showing investors have shown greater confidence, in the potential of this sukuk market. This is in addition to the issuance of the first ever subnational sukuk by Osun State in 2013, which was equally oversubscribed. Let me seize this opportunity to appreciate the efforts of the Debt Management Office and other stakeholders for recently releasing the 162.5 billion 7-year Ijara sukuk with a rental of 11.2 on the floor of the NGS. This third sukuk issuance was to finance the rehabilitation and construction of key economic roads across 6 geopolitical zones in the country. In addition, the federal government had issued 2 green bonds in 2017 and 2019, valued at 10.69 billion and 15 billion respectively to fund environmental friendly projects. Furthermore, the SEC had approved 3 corporate green bonds valued at 28.5 billion. That is from 2019 to 2021. Let me also acknowledge the effort of other market participants towards deepening the non-interest segment of the market. For instance, a company recently launched its first ethical investment product, the Scoop Fund. This will no doubt provide opportunities for portfolio diversification and the needed asset mix, as well as increased investor participation in our market. The Commission has been supporting all these developments through the development of relevant rules and regulations, registration of such instruments, and review of relevant disclosure by market intermediaries and issuers. Ladies and gentlemen, you will agree with me that the Commission, in its effort to sustain the momentum, is currently even reviewing some of these rules and will continue to fine-tune the rules, especially on the green bond and scope issuances, so that we can define further the market. The Commission has also supported on several occasions the green bond development programs. Such programs include those programs that were led by Climate Bond Initiative, the program led by Nigerian Exchange Group, the program led by FMDQ Exchange, as well as the program initiated and led by Financial Sector Deepening Africa, FSD Africa, to aid the development of non-sovereign green bond market in Nigeria. In addition, the SEC has adopted the Nigerian Sustainable Finance Principle as developed by Financial Reporting by FSRCC, Financial Services Regulatory Coordinating Committee. Adoption of the NSP is a vital step to achieving a sustainable global economy. The objective of set guidelines on SSP are broadly to stimulate a competitive and sustainable capital market, improve corporate governance practices, nurture an environment that facilitates job creation, and contribute towards an effort aimed at global warming. Since the capital market rely on full and accurate and timely disclosure of information, critical to the Commission is to ensure full disclosure of timely information as at when required. We are aware of some perceived challenges in investing in green bond, for instance. Some of these challenges include low public awareness about the green bond, costs involved in verification and certification procedures, and continuous recertification. And efforts are being made towards addressing some of these challenges. In conclusion, ladies and gentlemen, the Nigerian capital market is said to be a catalyst for the country's economic growth and development. This is a signal that with the appropriate collaboration among relevant stakeholders, as well as we are witnessing today, we can exceed our target sooner than expected. The need for concerted collaboration between stakeholders to grow this sector, create awareness, and promote professionalism among market players for effective and efficient operation of the institution concerned cannot be overemphasized. This will help to drive and enhance investor confidence and promote an information-driven market. This seminar is one of such initiatives for achieving the needed collaboration and awareness creation. We're thanking the organizers, the NGS, and other stakeholders for their contribution towards the development of the capital market, and wish you a very fruitful deliberation at this webinar. Thank you and God bless. Thank you very much for listening.
Thank you very much, Mr. Abbas, for the very enlightening keynote presentation. I will now invite Mr. Adamu Mohammed to take us through the first presentation for today. Mr. Mohammed is presently the team lead, Securities Issuance Unit of the Debt Management Office, Nigeria. He was involved in the debt issuances of Nigeria's sovereign green bonds and Sukuk. He has also served on various committees, including the Interministerial Committee for Review of National Charts of Accounts, the Technical Committee for the Implementation of Treasury Single Accounts, the TSA, in Nigeria. He holds a BSc in Accounting from the University of Maiduguri and an MSc in Financial Economics from the University of Leicester, United Kingdom. Mr. Mohammed, if you may please share your screen. Over to you.
Thank you for having me. Can you see my screen?
Yes, we can see your screen.
Let me start by the CEO of Nigerian Exchange, the Managing Director of Security and Exchange Commission, ably represented by Alhaji Abbas, the moderator, Alhaji Bintube, other panelists, other participants, ladies and gentlemen. Our topic for discussion today is green bond, harnessing green bond as a tool for personal growth. So we'll start by actually looking at our content. We'll look at background. We'll start with giving a background of what the green bond, and then we explain what green bond is all about. We'll also look at recent trends in the global green bond market. And then we also discuss the Nigerian experience. And we'll also talk about the green bond market ecosystem. We'll also shed some light on why we issue green bond. And then why should anybody invest in green bond? We will then recap and then give some references. So by way of background, climate change is real. And this is evident by looking at the increase in temperatures, rising sea levels, land degradation, and loss of biodiversity. A report by Intergovernmental Panel on Climate Change actually stated that we will require deep emission reduction, a rapid and far-reaching unprecedented changes in all aspects of the society in order to limit global warming. So in 2016, 196 countries, including Nigeria, signed the Paris Agreement on Climate Change with a goal to limit global warming to well below 2%, preferably 1.5 degrees Celsius, not 2%, only 2 degrees Celsius, compared to pre-industrial level. So the Paris Agreement is a landmark in multilateral climate change process because for the first time, there is a commitment, there is a common cause by these 196 countries to undertake ambitious efforts to combat climate change and adopt to that effect. Green or sustainable finance is a very structured financial activity that has been created to ensure a better environmental outcome. So market offering in sustainable finance to combat climate change include, of course, the green bond, what we are to discuss today, the green loan, sometimes used interchangeably, social bond, or all of them sometimes called the sustainable bond. This presentation is basically to shed some light on what green bond is all about, as well as the benefits for the issuer, as well as the investors in green bond. Because of the role finance sector plays in allocating capital efficiently, it remains a key arena for economies all over the world to make a real impact. As such, the best way to combat climate change while making profit is through financial market. So basically, with all this issue about climate change, which basically is real, we can see it is practical, there is need for nations to actually come together and combat this climate change. And of course, bottom line, the only way you can do that is actually harnessing finances to invest in areas that will help in sustaining the environment. So that is where green bond actually come into existence. So what is green bond? By way of definition, green bond is any type of bond instrument. Of course, it has the same underlying mechanism with regular bond, where the proceed will be exclusively applied to finance or refinance in part or in full a new or existing eligible green project. This is the main difference between green bond and other, conventional bond, because of course it has to be used to finance predefined eligible project, and which is aligned with the 4 core components of green bond principle. green bond framework ensures that projects are defined and that issuers deliver on their promises. So while green bond has the same features with conventional bond, the main characteristics, the main differential feature of green bond is that it is meant to finance predefined eligible green projects. So what are these four core components of green bond principle? Of course, the first one is the use of proceeds. Like I said in the definition, green bond is meant to finance eligible green projects. So the proceeds of green bond has to be clearly defined. Those eligible projects has to be clearly defined. And then the clear environmental benefit has to be also clearly defined for the investors. To tell the investors that this is what we intend to do with the proceeds of this green bond we are issuing. Unlike the conventional bond, of course, if you invest in FGN bond, you don't know what really the government is going to do with that fund. But for green bond, it has to be clearly defined that these are the projects we want to invest, and these are the benefit of these projects, of these projects. The process for project evaluation and selection, that has to also be clearly defined. You have to actually tell the investors that, look, this project, the environmental sustainability objectives and how the project fit within the eligible green project categories, and the process by which perceived social and environmental risks are identified and managed. So you have to actually explain to the investors that this is the process of how we select this green bond, the green project, because there are clear, taxonomies that are actually defined by the green bond principle on, which project qualifies as a, green project. And then the next component is the management of proceed. In as much as we know that the proceed is to be used exclusively for funding green project, how do you manage the proceed? You have to keep on reporting that to the investors. So you have to, in a way, create a separate account or a separate fund where the green bond project will be ring-fenced, and at the same time to make sure that you did not commingle the fund with other funds. And then the last component of the green bond is basically reporting. Unlike the conventional bond that, we don't report how we actually utilize the fund, we have, borrowed from, from the DMO's point of view now, from the investors. In the case of the green bond, first you have to report on how you allocate the resources. You have to report on the eligibility. There's eligibility reporting and as well as impact reporting. The impact reporting, and this reporting, in a sense, come on annual basis throughout the life of the green bond, depending on the tenor of the green bond you issue. So you have to actually be giving a report on how you allocate the resources over the period of the allocation of that, of the proceed. And then you have to actually talk about keep reporting on the eligibility of that, project, as well as the impact those projects are making on the environment. You have to actually give an explanation to the investors annually on, the impact of those projects, as you already define it in the prospectus when you are actually selling, the instrument to the investors. So some facts about green bonds. The first green bond was issued in 2007 by European Investment Bank under the label Climate Awareness Bond. By 2015, issuance of green bond was about 100 billion globally, the total issuance of green bond. France was the first sovereign to issue green bond in 2016, and is still the largest sovereign issuer to date. Of course, like the CEO NGX said, Nigeria issued its debut green bond in 2017. And of course, it's not only Nigeria's first, it is Africa's first, and indeed the fourth in the world. And the first 5 years have seen explosive growth in the sovereign, supranational, and corporate green bond issuance to finance climate-friendly projects. So despite the uncertainties in all walks of life in the year 2020, green bond issuance has increased from 266 billion in 2019 to 269 billion in 2020. But despite all this remarkable growth, green bonds still only constitute about 1% of the outstanding bond market issuances. So the market is still, a fraction of the total global market. So there is a lot need to be done. There is a huge, a space for further issuances of green bond. Like I said earlier, the green bond projects, their eligible projects are defined. The taxonomy of, clearly define the eligible green bond project. So some of these projects are itemized here. For the want of time, we will not go through the details, but of course it cut across these 8 sectors I have here: energy, transport, water, building, land and marine, industry, waste and ICT. So under these various sectors, there are eligible green bond projects. This is basically to give a guide of because there is going to be reporting at the end of the day when you issue green bond. So for you to know which of where are you investing, green bond proceed, the taxonomy will actually be a guide so that when it comes to reporting on the impact of the project, there is a clear guide on how to go about reporting it. So this is a whole lot of work put in by, the green bond principle to actually climate bond initiative and others to come up with these taxonomies that define the eligible green bond projects. Global trends. The recent trend in the global market, the impact of COVID-19 in 2020 proved a huge economic and social negative. But of course, the green bond market has shown its resilience as the year recorded an issuance of 269, which was even higher than the issuance in 2019. At the end of 2015, the green bond capital market had just reached a cumulative of 104 billion. Like I said earlier, the green bond market only reached the total issuance as of 2015 was just a little over 100 billion. But 5 years later, the total green bond issuance is in 2020, by December 2020, is over ₦1 trillion. So the top 5 countries that issued green bond include, of course, the USA, Germany, France, China, and the Netherlands. Like I said, basically beyond the issuance by the sovereign, there are issuance by the supranationals and then corporates. So US is leading the chart on the countries that actually issued more green bond, then followed by Germany, France, and China. In Africa, in 2020, talking about recent development, Egypt issued a debut green bond of $750 million, the first in the region. And in the Middle East, Saudi Arabia issued its debut green bond of USD 1.3 billion in 2020 as well. Their own is green sukuk. The forecast is that by Moody's, its sustainable bond issuance will hit a record in 2021, with green bond issuance is expected to hit 375 billion, a 39% growth from 2020. In fact, as at August, as up to date, the total green bond issuance in 2021 is far over 250 billion. So basically, the 375 projected by Moody's may be, almost be reached. As we are aware, there was, to actually tell us that, look, interest may further the interest on further issuance of the green bond of 2021 may even exceed the 375. US was back into the Paris Agreement in 2020 with the election of Joe Biden as the president of the United States. So these are some of the recent trends in the global green bond market. The Nigerian experience. Like I said earlier, Nigeria is a signatory to the Paris Club Agreement on Climate Change, where countries undertook to achieve nationally determined contribution, Nigeria, which are aimed at reducing carbon emission by 20% conditionally and 45% with international support by 2030. So pursuant to that, the DMO, working with, of course, like the CEO said, and Alhaji Abbas as well, the Nigeria working with other stakeholders, through the Debt Management Office, Ministry of Finance, the Nigerian Security and Exchange Commission, Ministry of Environment, issued its debut green bond of 10.69 billion in 2017 to exclusively finance green project. It was the first sovereign issuance in Africa, like I said. Nigeria issued its second green bond of 15 billion in 2019, of course, to still finance green bond eligible project. This project, eligible project financed by the 2 green bond issuance include renewable energy, energizing education, afforestation and reforestation, ecological restoration, and irrigation projects. In 2019, Nigeria had its first green bond issuance by Access Bank, corporate issuance, sorry, which is also the first certified corporate green bond in Africa, raising 15 billion to finance and refinance environmentally beneficial projects, which include renewable energy, flood defense, and agricultural irrigation. Some of the highlights of the sovereign issuance are here. I actually itemized some of the highlights. Of course, the issuer is the federal government. We work with advisors. The first one was Chapel Hill, Denham, and the second issuance, we work with more than one advisor, including Capital Asset, Rand Merchant, and Stanbic IBTC. Of course, the obligo is the federal government. The amount issued is there. The total subscription, the subscription increased from 101% in 2017 to 220% in 2018. Well, it's 2019, actually. It was meant to finance 2018 budget, but basically the issuance was done in 2019. The par value is 1,000. The coupon is 13.48% semi-annually for the 2017 issuance, and for the 2019 issuance, it was 14.5%. Repayment is bullet at maturity. The first one was rated as excellent by Moody's, so also is the second one. The first one was certified by the Climate Bond Initiative. And then the distribution of allotment is here so that we will not waste much time. I will go to the next slide. The number of investors. The first and the second issuance was basically targeted at institutional investors. There is some participation of retail investors, but to a greater or lesser extent, the issuance, the first and the second issuance of the sovereign green bond was basically targeted at institutional investors. But of course, there is some individuals or retail participation. You can see the first one is just 0.67%, but it increased to about 1.43%. So, who are the players in the green bond ecosystem? Who are the participants in the green bond market? We just look at the green bond market ecosystem, the multiple forces that play in the green bond market, contributing in different ways toward the success of the green bond issuance and implementation. Of course, of particular interest here is the investors, dedicated green investors. We are going to talk about them in subsequent slides. So this, the ecosystem consists of the issuer, which can be, of course, private or, corporate or sovereign. We did not have any subnational issuance so far, but of course we have sovereign, we have a corporate, and we are believing that in no distance time, there may be issuance from subnationals. And then of course, the other participants are investors. In the case of the sovereign issuance, we always work with transaction parties. The stock exchanges, because all the green bond issued were listed at the Nigerian Stock Exchange and FMDQ Exchange. Of course, then there are verifiers. The verifiers, like we said, there is always going to be reporting at every end of the year to actually tell the investors that this is how we utilize the money, and these are the benefits we are getting from the impact of the project we finance with the green bond, the fund, the proceeds from the green bond. And then there are policymakers, regulators. Of course, the Securities and Exchange Commission will fall into the categories of regulators. And then there are policymakers like, the Climate Bond Initiative, which is at the global level. And then, of course, there is civil society and indeed the society at large, because green bond, unlike the conventional bond, is targeted toward ensuring a more sustainable environment. So there is a lot of interest. And because of the reporting process, of course, the issuer will keep coming back to this to the investors. The regulators will also ensure that the issuer is sticking to the promise he made to the investors during the issuance of the green bond. So these are the green bond ecosystem. So why do we issue green bonds? From the issuer point of view. Now looking at, for example, the sovereign as an example. The popularity of the green bond has been rising considerably, especially in the last 5 years. Like we said, the issuance in 2020 and 2021 to date is well over 500 billion naira, $500 billion, pardon me. And green bonds are excellent ways to secure a large amount of capital to support environmentally friendly investment that may not otherwise be available. Of course, we agree that we have this serious problem of our hand, in our hand, the issue of climate change. So to actually solve this problem, green bond come in handy as a way of, harnessing resources, of, mobilizing resources toward, resolving that problem. So the following are some of the advantages of issuing green bond to the issuer. Now to the issuer. Of course, it supports financing of environmentally friendly projects toward reducing greenhouse gas emission and tackling climate change. The disclosure requirements help communicate the sustainability narrative. Of course, during the first and second issuance, you talk to the investors and you tell them this will actually give an opportunity to actually, inform would-be investors about the issue of climate change so that you elicit their interest in solving the problem. And so you understand, they will also be aware of what is happening with our environment. So that narrative will be communicated. The sustainability narrative will be communicated if you are issuing green bond. And then, of course, like I said, demand has remained very high from investors because there are a lot of appetite from, of sustainable bond from various categories of investors. And then it enhance the country or company's reputation and confirm sustainability commitment. Like we said, Nigeria has signed an agreement. It's part of the Paris Agreement on climate change. And we have actually made the commitment to reduce our emission, our national determined contribution by reducing emission by 20% unconditionally and 30% conditionally. So basically, how do we do that? How do we actually give an impression that we are doing something beyond the impression? At least the fact that Nigeria issued a green bond and we are basically working towards solving some of the environmental issues with the proceeds of that green bond will enhance the reputation, of the country in the eyes of, the international community. The same thing with the company. The green bond narrative is everywhere now. In some clients, basically, you have to be seen at the company that you are, part of, you are, environmentally friendly. So basically, the issuance of green bond will actually give, the company a better reputation. And then it also serves as an alternative financing option. Of course, using the green bond, you can, the sovereign, for example, has diversified, it is, investor pool, from the normal, the normal investors to environmentally, those that are passionate about environment, those that are dedicated green investors, those that actually want to see that something is being done about the environment, you actually bring them into the investment nets.
Mr. Mohammed?
Yes.
Apologies to interrupt, but we're sort of running out of time. So if
this is the last slide, I want to believe.
Great.
And then from the investor's point of view, of course, demand continues to increase. Nigeria's sovereign green bond has continued to see, rising appetite. Some of the benefit to the investor is basically it's provide the investor with a means of assessing sustainable investment in fixed income market. The disclosure requirement. So the green bond also give the investor the opportunity to interact with whosoever he is giving his money, be it the sovereign or corporate. What are you going to do with the money? And more so, if you are really passionate about your environment, you know that this money is going to be utilized towards making a better environment for you and the generation yet unborn. And then, of course, you are also diversifying your portfolio. And then the detailed impact reporting it shows greater transparency, unlike the conventional bond that, of course, you just give the money, you don't know what the money is being. And then again, the last but not the least, in some clients, the issuance investing in green bond will give you some, tax exemption in some clients. Of course, in Nigeria, it ranks pari passu, so it has the same future, just like all other, FGN securities are exempted. The same thing with the green bond. So basically, this is just for the want of time. I actually want to talk to us about what we have in mind for the future. Of course, there is no issuance of green bond in 2020 from the sovereign point, 2021 from the sovereign point of view, because of some of the challenges that Mr. Abbas highlighted. But of course, we are working towards issuance in 2021, and we believe that this forum will give an opportunity for retail investors' participation in the subsequent issuance. Of course, you've seen that the previous issuance, the retail participation was a bit low. But of course, we believe that investors are passionate about their environments. By talking to them, by the participant now talking to the potential investors about the benefit of investing in green bond, we believe that retail participation will even be higher in subsequent issues. So I want to thank you very much for listening. Thank you.
Thank you very much, Mr. Mohammed, for your detailed presentation. We've already started getting questions regarding the points you raised in your presentation, which we would address during the Q&A session. So we'll transition right into the second presentation. Our second presentation will be delivered by Mr. Kasumu Garba Kofi. Mr. Kofi is a fellow member of the Institute of Chartered Accountants of Nigeria, that's FCA, the title FCA, and a fellow of the Chartered Institute of Stockbrokers, FCS. He is also an authorized dealing clerk on NGX. He was a council member of the Nigerian Stock Exchange. His working experience spans over 20 years, covering public sector, oil and gas, financial services, of course, the stockbroking industry. Over to you, Mr. Kofi. If you may please share your screen and make your presentation.
Okay. Share it.
Toby, I think the other presenter has to take off his screen.
Yes. Mr. Mohammed, if you may please stop sharing your screen so that Mr.
Okay.
Yes.
Thank you.
Over to you, Mr. Kofi.
Okay. Yeah. Good afternoon. The CEO, the DG Exchange, heavily represented by Abbas Mohammed, and my colleagues. I would like to stand on the existing protocol. And based on this, I would like to inform the investors that yes, we have this, the scoop, the green bond scoop, and other products that are available in the exchange. The exchange made it possible and available for the investors, particularly the retail investors, to participate in the market and to not wait until the primary issue, that they can trade it if they need the money and they can buy from the market. APT is hereby also give a platform that you can trade this even with your handset. So the investors that want to buy this stock have no time to wait for the primary issue. They can come to the exchange through the online trading, buy and sell as they so wishes. We at APT Security and Fund Limited, we also assist the medium investors and small-scale investors that want to exercise this facility to come to the market. We can enable them. You don't need to source the bond running into billion. Even if it is 1 to 2 billion, we can take you to the market to get that one done. And it is possible that a lot of our investors of the North that wanted to come to the market without taking the interest bond, they can come through scoop bond, and we can help them to do that. Equally, for those who want to merge their companies so that they can be in a formidable force, that they can come to the market, we can also help them to do that. If you remember, the CCNN, cement company of Northern Nigeria, was merged with Obulu of Benin, and now it comes Boa Cement. And we can see what the investors are benefiting from there. The same, we can also help the investors when it comes to the collection of their outstanding share certificate, bonuses and dividend. So there is the e-platform that make it very possible, but we as a broker, we can also help them to do so. We at any given time you want to buy or sell your scoop or otherwise, we can give you that platform. And APT has been appearing in the top 10 by both volume and value per week. As you can see it, we appear more than 21 times from January to date, and we hope to appear more before the end of the year. So there is room that an investor can come to the market and also source this scoop bond, green bond, and the stock through the platform of trading online. So we advise the investors to please take advantage of the market and also see the wisdom participating in the market. because we believe that is where it matters. At any given time, you can sell your school without people knowing. And the margin that we are taking at the commission is just about 1% or less. And therefore, you will get your money at the market rate. Last year, some of these could gain a premium of 40 to 50% above the offer price. This never happened before. And therefore, we want the investors to take advantage of the market and make sure when there is such premium, they take advantage of the market so that they improve their cash. Now that they are not trading at that, but thereby you can still sell and you can still make a premium. I know the FGN Scoop 2 and Scoop 1, they are running between 5 to 10% premium, which is good apart from earning your fair value without any loss. So the investors should please try to subscribe. You don't need to have a laptop or iPad. With your handset, you can trade. And this makes life very much easier to all and sundry that you can take advantage of this market. So we appeal to the investors to do that. For our investors, we are appealing to them. We have seen what happened to our market. Where is Chinchangi Airline? Where is Cabo Airline? Most of the family business, they doesn't last. Please come to this market. You can see Julie Pharmacy is listed and we can.
Hello, Mr. Curfey. I think we've lost your audio. Are you still there? Mr. Curfey, can you hear me? Okay. What, in the interest of time, we can do, we will proceed to the next session. And of course, Mr. Curfey will be joining us on the roundtable session. And so he may still be able to share some of his remarks in the roundtable session. So I will just go straight to the roundtable session. We've already heard from Mr. Adamu Mohammed, and we've heard very briefly from Mr. Curfey through the insights that he shared in their presentations. As we transition to the roundtable session, we'll be joined by Ms. Umuhani Ahmad Amin and Dr. Afolabi Olowokere. I hope I got that right. A brief profile of our new speakers who will be joining us in a roundtable session. Ms. Umuhani Amin is a member of the board of directors of NGX. She's a senior counsel and capital market solicitor with over 15 years multifaceted legal professional practice experience with specialties in core financing, Islamic finance, legal and regulatory compliance, estate planning, private placement, privatization advisory, corporate and commercial law. She was previously a general counsel at Northbridge Investment and Trust Limited. She has been secretary and legal advisor to several companies and served on numerous boards. She has significant experience in Islamic finance and Takaful spanning over 10 years. She's a certified PPP specialist from the Institute of Public-Private Partnerships, that's IP3 in Washington, DC. And she's a member of the Nigerian Bar Association, NBA, and International Bar Association. A brief profile of Dr. Afolabi as well, Olowokere. Dr. Afolabi is the head Economic Research and Policy Management Division at the Securities and Exchange Commission, Nigeria. He holds a doctoral degree in economics from the University of Ibadan under the African Economic Research Consortium, sponsored collaborative PhD program, CPP for short, in Sub-Saharan Africa. Dr. Afolabi is a research fellow and has consulted on various international and local organizations. He also serves on various national and international committees analyzing economic and financial issues. To facilitate this session, we have Alhaji Mohammed Mustafa bin Tube. Alhaji bin Tube was the pioneer managing director, the CEO of Jazz Bank, PLC. He has over 30 years of institution building and corporate governance experience, garnered at reputable boards such as the Nigerian Communications Commission, NCC, Bank of Industry, BOI, Hog Robinson, Nigeria, Nigeria Reinsurance Corporation, FSB International Bank, as amongst others. He has also participated in various federal government of Nigeria. He actively participated in the federal government of Nigeria's Vision 2020 program, and he supported various federal government initiatives such as the Technical Committee on Privatization and Commercialization, as well as the chairman of the interim board of Gold Links Insurance PLC, appointed by the National Insurance Commission of Nigeria. He's currently the chairman, CEO of Burak Capital Limited, a financial advisory firm that actively participated in the structuring and offering of federal government of Nigeria's Sukuk program that raised over 350 billion naira in Nigerian capital market for infrastructure development. I'll now yield to Alhaji Bintube to moderate the roundtable session. Over to you, sir.
Thank you very much. First of all, it's my pleasure and privilege to moderate this very important distinguished panelists. I would also like to thank the NGX and the APT Securities for sponsoring this event. As we have heard from the previous speakers, both green bonds and the Sukuk are part of the domain of ethical investment or social and sustainable investment. And we have also heard that Nigeria has also thrown its hat into the ring by issuing both the Sukuk and the green bonds. And major global players, GE, Chevron, etc. In terms of international finance institutions, HSBC, Amana, Deutsche Bank, UBS, etc. Also not only into Islamic finance, but they're also actively participating in the green bonds and issuance programs. I don't think we have much time, but as you can see from the profiles of the panelists, I think the organizers have done an excellent job of selecting them. And therefore, assure you they will not only meet, but exceed your expectations. Islamic finance, like the previous speakers have said, is gradually getting integrated into the global financial system. Like I said, Nigeria, or like the CEO of NGX said, Nigeria has the potential to be a hub for Islamic finance in West Africa. Recent developments, you've heard about the FGN Sukuk 1, 2, and 3. And there was also the recent corporate Sukuk, which is expected to be listed on both the FNDQ and the NGX. And more are coming, actually. And therefore, I'm also pleased to say our company, Brokerage Capital, was one of the leading advisors to family homes, which issued the first to be listed corporate Sukuk, which was highly welcomed in the market and highly subscribed. And therefore, as we look forward for more issuances, both green and Sukuk, we expect all operators, the regulators, to really cooperate and collaborate to deepen the market and also to widen the menu of products and services. Without much ado, I think we can go to the panelists have already been introduced. I would like to start with Adamu Mohammed of the DMO. First question, Adamu. Can you tell us a bit about the impact of COVID-19 on the global bond trade market and how it has affected the Nigerian investment landscape? Thank you.
Okay, thank you, Alhaji, for this question. COVID-19 pandemic actually at the beginning, well, the second quarter of 2020 led to the lockdown of almost the entire global economy. So our situation as a country, Nigeria, our situation was exacerbated by the collapse in the prices of crude oil in the international market. And for that, Nigerian instrument, talking about Nigerian instrument include, of course, the Eurobond that we issue in the international capital market, and then, of course, the domestic instrument we issued here in Nigeria, which include some of the instruments we talked about, the Sukuk, the Green Bond, and the FGN Bond. From the international capital market point of view, of course, the lockdown, and then and by extension, the collapse in the prices of crude oil in the international capital market led to a lot of investors to actually, like flight to safety, not only for Nigeria, all commodity exporting countries, they ended up, selling, those instruments, which led to very high yields in the international capital market for our instrument. Of course, Nigeria intended to issue Eurobond in 2020, but because of this unfavorable market condition, we have to shelve that, proposed issuance in 2020 and concentrate in the domestic market. And luckily for us, because we have done a lot of work in developing the domestic market, the DMO, and of course, indeed, all the stakeholders, Nigerian Stock Exchange, the FMDQ, and all the other participants in the market was robust and resilient, so much so that the intended domestic external borrowing was converted to domestic borrowing, and then so we became reliant on our domestic market. And luckily for us, because of this flight to safety thing that foreign investors are exiting the market, there wasn't much OMO issuances, so the rate in the domestic market declined considerably. So the domestic market became extremely favorable, while the external market, which is the international capital market, became a bit unfavorable. So that is why we couldn't go to international capital market in 2020, of course, because of the COVID and its attendant, repercussions. But luckily for us, like I said, the domestic market became resilient because it was developed. So we have actually issued a lot of bonds to the tune of more than 2 trillion in 2020. And, so the domestic market has been a serious help in actually helping, the sovereign in meeting its financing need, because COVID has actually made the international capital market unfavorable. So to a greater or lesser extent, the market, with the exception of some issues we have with local instruments, with retail instruments, the FGN bond market was very robust and resilient, and it was the one that the government relied on to actually raise its funding in 2020. Thank you.
Thank you very much. Kasim Kurfi, in a challenging and uncertain situation, why is trade so essential for retail investors? You talked about retail investors significantly in your presentation. Kasim, are you back on course?
Yes, I'm back.
Okay, you heard my question.
Yes, I had your question.
Go ahead.
As we are all aware that during the COVID, a lot of the foreign investors get out of the country. The retail investors really played the market, and the market was so favorable in just a quarter. From 1st October to 31st December last year, the market gained 50%. But individual stocks, most of them complies with including the scope. Some of them gain as much as 100%. And the reason is that the retail investors find that it's more reliable to invest this market and get a reasonable return and above what you are likely going to get elsewhere. So we advise the retail investors to keep patronizing the market, especially now that the mobile trading is available, that you can trade with your hands anywhere, even from your bedroom. And therefore, take advantage of this market, and we hope to continue doing so.
Thank you very much. Thank you very much. I will jump NGX. I will jump Mahani. I will go to the SEC. Dr. Afolabi, are you around?
Yes, good afternoon.
Good afternoon, Dr. Afolabi. Seeing as the investment terrain for green bond is expanding and as a regulatory body, are there plans to update existing rules that will protect investors across boards? That's the first part of the question. And how will it impact capital market growth? Second part of the question.
Okay, thank you very much. First, I would like to congratulate NGX for this. We know that green bonds are very necessary, especially in the kind of climes that we find ourselves. Of course, they are necessary everywhere in the world for two major reasons around us there. We have a lot of infrastructure issue, and we know that some of these instruments, when they are already named, the possibility that the proceeds will be used for such is very high, especially when you compare with past experiences where bonds are raised and the money are just used as part of budget process without really having some capital projects on ground. So it's going to be expanding. We have infrastructure deficits, we have environmental issues. So it's something that we know is very, very useful. In terms of investor protection, that's one of the most important functions of the security regulator. We have the responsibility to protect investors in our markets, in the kind of instruments they trade in, as well as kind of platform they participate in. As you all also understand,
you need to raise your voice.
As you also understand, over the years, the Commission has provided leadership in the development of relevant rules and regulation on green bond, as well as some other related innovative products. During the presentation of the Director General, as given by Mr. Abbas, it was able to show that the Commission will continue to sustain its current efforts and initiatives at promoting investment in instruments such as green bond, and he also mentioned SUKO. And going forward, we'll continue to collaborate with climate bonds initiatives. We've done quite a number of things with NGX, FMDQ, FSD Africa. In terms of rules, the process of rules making is continuous. It has to be innovative, forward-looking. Sometimes it guides the market. In some other times, it also has to be responsive to the development in the market. There are rules that are brought to us from a platform like NGX, and we then have to look at them for the purpose of developing the market. For instance, there will be continuous rule to ensure investors are protected through more information disclosure. That is very key. If you mention that an instrument is green bond, it's going to be used to finance environment-friendly projects, it must be so. So there are characteristics that they must meet. So the regulator must ensure that those characteristics are well defined and then they are complied with. And then there are also periodic information disclosure. So the regulator often will look at the existing information disclosure and see what aspect to be improved on them, so that investors who have invested in this as a result of the kind of value they hold for this type of instrument are also continuously assured of such investment. There are rules in the pipeline on ensuring that can guide the development of similar products in the market, green bonds, social bonds, and things like that. We also know that when investors are protected, they have more confidence in the market, and that will also increase their participation. And when they want to participate more, that means issuers of such instruments in the future will then have a pool of investors that will buy into their kind of issuance. So it's a very positive thing for the market to have green bonds and also to protect investors, and everything will work towards the development of our market.
Thank you very much, Dr. Afolabi. Let me go to the lady of the house, Umahani. The NGX has played a prominent role in the distribution of green bonds in Nigeria. How does investing in green bonds provide environmental sustainability? Please go ahead.
Thank you, sir. So as a multi-asset securities exchange hub, the Nigerian Exchange Limited prioritizes product development in the Nigerian capital market. We are focused on introducing products that offer diverse investments and risk management opportunities to investors, while at the same time drive economic. The exchange is also one that is concerned about the impact of businesses on the environment, and it has it has the introduction of green bonds as one of its initiatives. The exchange in the past has been very, very involved in initiatives of the environment. The World Environmental Day and a partnership with Recycle Point are some of the initiatives that the exchange has been involved in the past. At the exchange, we see the environment as part of our ecosystem because we know that no business can be able to succeed, no matter how well it's been done, without, if it's not under a competitive environment. So a green bond in any type is any type of debt security for which the issuer agrees to allocate funds if to eligible projects or assets with environmental benefits, like other speakers have mentioned before. So green bonds can be issued by government agencies and corporate organizations. The use of debt security funds should be allocated to green projects identified by the issuer. The green bonds should also contribute to environmental objectives and will be included in project categories such as renewable energy, green transportation, green building, eco-efficient products, and processes, etc. The federal government debut sovereign bond program of up to 150 billion naira in 2017. The proceeds of the first and second tranches were targeted at financing projects in the budget that have positive effects on the environment. Albeit there were some criticisms surrounding the project's selection and their certification. So this leads to another conversation about the framework for eligible certification for eligible green funds projects that one will say that because from the legal aspect, particularly this concerns a lawyer, but of course I digress. The primary benefit of green bonds is that they are transforming financial services and the way the participants do in businesses. They promote greater transparency on how issuers and investors use their funds and evaluate their impact. Financial markets are starting to behave now differently, providing avenue for wealth creation and responsibility of their environments. So this also attracts new investors and who are interested in issuing sustainable strategies for environmentally friendly projects. Green bonds are an excellent way to secure large amounts of capital to support environmental investments that may not otherwise be available or that may be uneconomic using more expensive capital. Green bonds are well suited for large sustainability projects such as wind and solar developments, for example. When you require capital investments ahead of revenues, which will generate modest revenue over a long-time investment horizon. For the foreseeable future, we see green bond issuers are leaders in this developing space, and they can encourage other municipalities to establish and participate in a financially motivated space. So at 2015, extant green bond issuance were valued at about 41.8 billion USD, worth according to the Climate Bonds Initiative. Green bond issues are proliferating the global space due to more awareness and the global sustainable development goals. There is a lot of market potential, I see. This has also extended to the Islamic finance sector with the advent of green sukuk issues in the past years. Malaysia issued the first green sukuk in 2017. Until date, it has the largest number of green sukuk issuances. The benefits are evident in the ecosystem. and offers prospects for adoption of our jurisdiction. Islamic finance principles generally align with sustainable investments, and market players have explored these options to create more market opportunities and ensure growth. As earlier,
Sorry, Uman, I need to stop you here.
Okay,
I will come back. I will come back to you.
Okay, sir. Okay, sir.
Yes. Thank you. Well done. I actually left you not only because you are the only lady,
yes,
but
sir,
because that's the crux of this webinar today about the green bonds and the
yes, and I'm saying exactly what the exchange is trying to do to promote.
Yeah. Let me quickly go back to Adamu Mohammed of DMO. Is there a timetable for issuance of FGN traded bonds that investors can access? Mala Mohammed, I repeat, is there an existing timetable for issuance of FGN traded bonds that investors can access?
Yeah, okay, thank you, sir. Certainly there is. To start with, when we are looking at the instrument, of course, for FGN bond, we have quarterly calendar, which basically give the investors, an idea of what we intend to issue over a period of 3 months, a quarterly calendar. So at the beginning of every quarter, the Debt Management Office release an issuance calendar to tell the investor, to tell the market that this is what we intend to issue in these 3 months. So at least that is there, but that one is only for FGN bond. And then beyond that, because we issue FGN bond monthly, there is also the offer circular that we release 2 weeks before every auction. Of course, the offer circular, like I said, is released 2 weeks before the auction. It will specify the instrument to be issued, their tenor and so on and so forth. But that is for FGN bond. But for the other instruments, like green bond, like Sukuk, and the FGN savings bond, which is another retail instrument, even though it's not our topic for discussion today. The FGN savings bond is also issued monthly, and it's always issued first Monday of the month, first complete Monday of the month. The Monday of this month, the first complete Monday of this month is starting next week. So by next week, the offer circular for FGN savings bond will be out, and it will clearly specify the futures of the FGN savings bond the sovereign intend to issue.
So you have a timetable. So you have a timetable.
Of course, there is.
Sorry, I need to move to the next because we are running out of time. Sorry.
Okay, all right.
I think you've substantially answered the question. Okay. Mr. Kasim Kulfi, as an investor, how do I invest in Sukuk and green bonds? And what guarantee do I have of a good return on investment? Kasim Kulfi.
Okay, as an investor, you can invest in the Sukuk and green bond in 2 ways. First, in the primary issue. In the primary issue, all you need to do is that aside investing the amount, meeting the minimum requirement, you need to put your SSF number so that your Sukuk will be credited into your stockbroking account. And once it's credited there, having listed, it will be available for credit. The other way, you can buy it through the secondary market, as I demonstrated earlier. You can just use your handset through the e-platform, buy at whatever quantity you want to buy at any given time, and you can trade. We have been doing it day in, day out, and most of my investors, they do buy by themselves, and they do sell by themselves at a premium. Thank you.
Thank you very much for keeping to time. Dr. Afolabi,
yes.
COVID-19 changed business landscape in a sense that a lot of the companies and businesses went digital. I believe you agree with us. What safeguards have you put in place to mitigate future investments? In 1 minute, if you don't mind.
Okay, so a lot of things have changed. We know there are more risks now than before. Forecasts may change. assumptions about forecasts may change. Regulators may not be able to do a lot of things except they use technology. And several regulators around the world have been looking at how to do that. So some of the things that we've done, we have encouraged electronic filing of application and returns. We've encouraged virtual meetings such as AGMs. We've also encouraged business continuity plans that are triggered by CMOs as well as SEC. I know Nigerian Stock Exchange, now NGX, they did a lot of things in business continuity when we are at the peak of Corona, and it hasn't even stopped. And then going forward, we also understand that a lot of businesses are going digital. This time around, it requires that businesses will have to invest in technology. They have risk of cybersecurity, they have investment costs that they are going to bear, and they have to change some of their processes. Regulators also have to invest in technology to be able to supervise what they are supervising. We also understand that there may be evolution of technology firms, fintech, and the rest, because people want to invest digitally. And when they do, they may also be exposed to new risks that they were not used before. So the regulator is always conscious and is looking at how do you register this and still protect investors but not stifle innovation. So that's why some of the time we have things that are crowdfunding rules. And recently we just did our regulatory incubation program for fintech to come in so that we can discourage Ponzi's, encourage innovations, and ensure that investors are protected. Thank you.
If I may come in, is now a good time? I will just because we are running out of time, I thought I should come in and perhaps take one or two questions from the Q&A session, which of course will be directed at our panelists before we run out of time at 4:30. Mr. Moderator, I hope this is okay by you, sir. Okay, so I'll just go right ahead. So I think one particular question bubbled up to me, and this question was asked by Taiwo Afinju. I think he or she has asked, how and where can retail investors participate in green bonds and sukuk bonds? I suppose this question would best be answered by Mr. Curfey. Please, can you take the question, sir?
Okay, as I've said earlier, that if you want to buy green bond or sukuk bond, you have two options. The primary option is that when it comes for the first time in the market, and mostly it's at par, you just fix your CSS number, stockbroking house, and the amount you paid. You will get it credited directly to your account. The other issue, you can come through secondary market. People that did not apply in the primary market, they come to the secondary market, and that will make life easier. Now we have mobile apps that with your handset, you can buy sukuk, you can buy green bond, and you can sell at the prevailing market price. Thank you.
Thank you very much. So we have another question from Lizzie Ibene. Lizzie has asked, how sustainable is sukuk, and can it withstand foreign exchange shock? Dr. Olowo Okere, would you like to take that question, sir?
Okay, so for sustainability, definitely is an investment. Of course, it depends on what the person meant by what is sustainable. But if it's going to be whether it's a good investment, definitely is a very good investment. Whether it can withstand foreign exchange risk, I think for most of the time as an investor, you also speak to your advisor or your stockbroker to really be able to know your risk appetite and the kind of risk that you face and how to diversify your portfolio. But all we know is that if you are investing in a currency, a single currency asset, you may also be exposed to some foreign exchange risk. However, that doesn't mean that your portfolio cannot still be diversified against several asset classes. But I would advise talk to a financial advisor. Thank you.
Thank you very much for your very brief question. At this point, I would like to just add that there's a lot of questions that we have received. Some questions bordering on some very extensive responses that we would need to give to these questions. So take, for example, we got a question from, where's that question again? In 1 minute. From Amir Maiturari, who has asked how sukuk is structured. This question, of course, you can get a lot of information about this if you participate in a training themed Islamic financing, maximizing Sukuk bonds, which is holding on Tuesday, 5th of October, by our Learning and Capacity Development arm, X-Academy. In the interest of time, I would just like to hand over to back to APT, who will do a very, very short exhibition about APT and its opportunities and what it offers to retail investors. Over to you, Raphael.
Okay, thank you. Hello.
Yes, we can hear you, Raphael.
All right, so yeah, good afternoon. All protocol observed. My name is Raphael Olaoye, the head of Information Technology in APT Security Fund Limited. I want to present a few things we do in APT and also showcase that our business is driven by technology. Who are we? We are APT Security and Fund Limited, members of Nigerian Exchange, and APT is owned solely by its only owned Nigerian company incorporated as a limited company on June 10, 1991. Then our vision is to be among the leading stockbroking firm with high value added to all shareholders. Then our location is at 29 Marina Church House, 3rd floor. Then what we do, we are financial advisory services. That is, we offer financial advisory service to corporate organizations in the following area. One, we have capital issue and raise, brokers to issue, capital restructuring, mergers and acquisition, debt swap, equity conversion, feasibility reports. There are also connections of outstanding share certificates, bonuses, and dividend. The major transaction we did in 2020, despite the COVID-19 pandemic, we have brokered to issues for Bua Cement PLC, that is about 130 billion bonds in 2020.
Mr. Raphael, if you may please wrap up because we're out of time already.
All right, so we have many others transactions that were done. There was also a stockbroking firm we do with private equities, over-the-counter trading. Then when it comes to performance, I think we are doing very well. We're among the top 10 in the Nigeria's exchange. Then our offering, we have a robust research platform using the latest meta stock techniques for technical analysis and for fundamental analysis. So we also have technology, that is, like our business is driven by technology. So we have mobile app. We also have a web portal that's help us to, our clients to be able to trade seamlessly. And wherever they are is a trading floor. This is a web portal. So you can log in, whether it's Sukuk or FGM bond. So you can trade it on our platform. Then our location, you can contact us in these locations. We're in Lagos, Abuja, Kaduna, Gombe, Kano, Katsina, Jos, and Sokoto. So you can just get in touch with us in any of these locations. So we direct you out to open an account. And now you can also be a client who will be able to trade in Sukuk or any other bonds available. And not only the equities. So we are 24/7 ready. And we are welcome anytime you come. Thank you for the opportunity.
Thank you, Mr. Raphael.
Thank you.
We've run out of time. That is all we have time to take for today. To close out the session, I would like to invite Mr. Olumide Orojimi, the head of retail coverage at retail investor coverage at NGX, to deliver the closing remarks. Over to you, Mr. Orojimi.
Thank you very much, Olitobi, and good evening, everyone. I'm sure all of us will agree that today's session has been a very insightful one. I've learned a lot, and I believe that all our guests this afternoon have learned a lot as well. This type of webinar, previous ones and many to come, signpost the ambition of the Nigerian Exchange Limited to provide a veritable platform where investors can learn about the various asset classes to help them make sound investment decisions. Events of this nature wouldn't be possible without the eminent speakers that have spoken today, from DMO to SEC and our host of other panel speakers. I don't want to take much of our time because the day is fast spent. I would just like to thank each and every one of you, especially my CEO as well, Mr. Temi Popola, and the DA Trading Business, Mr. Juche Mika, my colleagues in corporate comms, IT, and retail investor coverage, all of whom have made significant contributions to the success of this event. Thank you all so much, and we'll see you next time around.